Kitco Mining's special coverage of the Precious Metals Summit is brought to you by Nucor Gold.
Stocks are on a tear, but it's the best thing to buy, sell, or hold. Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Precious Metals Summit in Beaver Creek, Colorado. Joining me today to discuss this and many other things is John Feneck, founder and editor of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks so much, Paul. Great to be here.
Let's start with some M&A action. It's been a very busy week. Anglo American and Teck Resources are to join to create a $53 billion company to be called Anglo Teck. Elemental Altus Royalties is to join with EMX Royalty in an all-stock transaction valued at $456 million. And Newfound Gold will acquire Maritime Resources. When you look at those transactions all together, there's a very diverse range of transactions there, John. What does that tell us?
That we're in an M&A cycle that's going to bleed into next year in a big way. I'm hearing a lot of M&A here at the conference. This is just the beginning of a wave of that, I believe. And all of those deals seem to make sense, right? Anglo Teck is going to be a monster. The two royalty companies, I'd have to look at their market caps, but they're probably somewhat in that same range of size, right? And then Maritime we owned a little bit of in that takeout. So we're going to see a lot more Maritime type deals, I think, where the juniors are just going to get swooped up for 30, 50, 70% premiums here by the mid-tiers and the majors as we move forward.
All of those deals seem to be more or less mergers of equals or transactions of equals. Even Newfound Gold and Maritime Resources, the way their market capitalizations have changed in recent times, they've shifted dramatically, so that's almost a merger of equals as well. Noticeable, there's no big miners buying smaller miners in that set. But we're here at the Precious Metals Summit. The big companies have their corporate development teams crawling all over the place, and it's not just one or two people, they're 4, 5, 6 people strong. So presumably we're going to see a lot more transactions from the big guys benefiting from the smaller guys later on.
Yes, benefiting. The larger companies have to fill their pipelines. There's a lot of great juniors out there that have 2 to 3 to 4 million ounces of gold just in the ground, and they need money, right? Or they need a JV, or they need something. They can't keep just diluting shareholders into the ground, right? And so many of these juniors will do that, where they have, just ridiculous share counts, in my opinion. And it's not, the stocks aren't moving that much because they have so much selling. So we call that an iceberg in the mining business, where someone's just sitting out there at a certain price, and then you think you're through that price, and then they show up with another 500,000 or a million shares, and you're like, oh my gosh. It's very frustrating for not only portfolio managers like myself, but for clients, because we're in a bull market, right? We're seeing GDX and GDXJ up 2.5% yesterday alone, follow through today, and yet some of these juniors aren't doing anything. They're not participating.
Okay, another big story last night. Barrick Mining is selling its Hemlo mine in Ontario in Canada for $1 billion, which will create another single asset mid-tier producer. The mid-tier is getting quite fat, and many of those companies do not have pipelines. So again, that suggests there's going to be more M&A pressure, more buying pressure for the bigger on the smaller to come.
Yeah, absolutely. I'm not a big fan of single mine companies because there's just added risk. I always prefer to go for the ones that have 2 to 5 projects. You and I were having dinner last night with Denarius Metals, DNRSF in the States, DMET in Canada, 37-cent U.S. stock that's in production right now. It's like, but that's where their sweet spot is. Both the chairman and the CFO have experience in Colombia, so that's great. That's where they're producing. But then they have, other projects in Spain and elsewhere that they can, move forward. We also met with Next Gold here at the conference, NXGCF and NEXG. Very impressive presentation, because now with the merger of Next Gold and Signal back around Christmas, the stock just really built a beautiful base and now is just blasting higher on heavy volume. Part of that is probably short covering. I know they identified some short interest in the stock, but when I talked to the CEO, Kevin Bullock, he was like, listen, we can pivot to either one of these, and we have the teams to build it. And that's what makes them different. So that's what's exciting is some of these development stories, or the ones like Denarius that are already in production, moving from development already. The market doesn't even know this. It's like these stocks are really flying under the radar.
Another news release that came out this morning or last night, I think you'll enjoy. Newmont voluntarily delisting from the TSX, from the Toronto Stock Exchange. Its reason, due to low volumes. We've spoken about the value of companies having a listing in the US, and it seems that if not even Newmont, the biggest gold company in the world, can get volume in Canada, what chance does anybody else have?
Yeah, it really underscores that the U.S. market is on an upswing, and if you're a junior or a mid-tier and you're in a place like Australia, right, where a lot of these companies don't have any U.S. ticker, not even a pink sheet listing, it's a big mistake. Like we're in a bull market, guys. Like spend 50 or 60 grand to get it done. Stop spending money frivolously and put it into use for shareholders, right? So you can actually help yourself by getting another pool of capital in the U.S. that can buy your shares.
I think one thing that's been very interesting with this recent run-up, John, when you look at the market capitalizations of companies, they obviously go up at different rates and at different times and different speeds, different velocities. And so you have seen some some companies making big jumps, big leaps in their market capitalization. Core Mining springs to mind. They've jumped up to above B2 Gold's market capitalization, even though they produce, more or less half the amount of gold or precious metals. To what extent do you think there will be opportunities for some companies to really leverage their gains into acquiring other assets, maybe in a similar way as going back 20 years, some of the dot-com companies were able to leverage into traditional media companies because they got such outsized gains? Yeah,
good point. I think some of those companies could have much more leverage and acquire some of these juniors and microcaps very easily because some of these CEOs are exhausted. It's been a tough run since 2011 and 12, right? A lot of the guys and women I see here at the conference, there's going to be a couple of camps, right? One is they see the opportunity that you and I see, that we're in a bull market, and they're going to hold everything they have tight with both hands. And then there's the people that will say, hey, that 50% premium sounds really good to me. I'm getting close to retirement age and I'm exhausted, right? Let's just be honest. That's what makes markets. So the people that have the size are going to be in a really good position right now.
Okay, you focus a lot on critical minerals, and recently on August 13th, President Donald Trump of the United States announced $1 billion in financing for critical minerals projects. What does that $1 billion do? Where will it get the government?
It's a great headline. It will do nothing. It's hard for me to even say that's a start. Why do I say something like that? Well, everyone knows I follow tungsten now. I should probably get. There's actually a town called Tungsten in Canada, which I was told by a Canadian CEO here. And 81% of that last year was produced by China. The U.S. produced 0. I would argue that the Chinese-U.S. relations are deteriorating, not increasingly getting better. Therefore, when you have 4/5 of the world's production in a country that doesn't like you, that production is not coming this way. So what are we going to do differently about it, right? $1 billion. Oh, wow, great. That's not doing anything to really fast-track these companies. What we really need to do is have Trump and his team say, let's take a closer look at permitting. Permitting in the U.S. is still a bear. If you're on private land, maybe not so much, but yeah, federal land is a whole other ballgame. And there's some great CEOs here at this conference and in the industry in general that want that help. They can create jobs. Look at the non-farm payrolls number that we just saw August 1st. If I were in Trump's cabinet, I'd be saying, hey, we can create tens of thousands of jobs in our country by helping these mining companies in the U.S., right? We don't have to do anything illegal. We can just help them fast track what they have been trying to do for a decade plus in many cases.
A question I was going to ask you a little bit later on, but now seems a pertinent time to do so, John. I was going to ask you, we're at this investor conference. What have you learned that you didn't know at the start of the week? And before you give your answer, let me give my answer, because talks to your point on permitting. I've spoken to a number of companies that are active in Arizona, and they all say that there's a lot of moves afoot by the Trump administration. There's a bill being drafted to radically change project permitting to put a more manageable timeline on that and potentially overhaul the NEPA process. Obviously, it remains to be seen in what shape that bill will come out and obviously whether that will be passed or not and what time frame that will be implemented. But that sounds like a very positive measure coming out from the Trump administration to help accelerate the development of mining projects in the United States.
That sounds great. And I live there, so I would love for that to happen. There's a lot of great companies in Arizona that deserve that. What I've learned, I've had 30 CEO meetings in the last 3 days. I got quite a migraine going on right now.
I'll go easy on you for the reminder.
So in no particular order, I met with Lahontan Gold for lunch with my YouTube partner, Don Durrett. He's a huge fan of this stock. We are just getting positions started now. It seems like when you look at the chart around tax law season, these guys got absolutely smoked. And it was really an artificial situation. Now they have a larger person out there that's the proverbial iceberg we just mentioned, but that iceberg is almost done. So their Santa Fe project looks really good. It's in the U.S. I think that stock is undervalued as a gold stock. And Kimberly's got a great resume. She's a tenacious person. I think that stock looks really good. Who else have we met with here? Silver X we met with. Very surprised. They were up 18.5% yesterday. Stock's just in a serious uptrend. But if you look at a long dated chart, the stock was absolutely creamed. The 52-week high low is unbelievable. I think they got to 12 cents Canadian, and now it's at 57, 58 Canadian, right? It's when we talk about exponential growth and sort of lifetime opportunity in our sector, it is right now in some of these smaller names, because you can see on the chart of Lahontan or Silver X what they've done over the last 12 months. We're not talking 5 years. We're talking 12 months. So my goal with meeting with investors at a conference like this and just managing my investors in general is telling them to go buy something. Just make a decision, right? Stop watching stuff and putting $1,000 into something, keeping it on your screen, right? You have to put bigger positions on.
One of the unique things you do, John, I think, is you have an investor group that you talk with, but you also sort of bring them to events like this to participate in your meetings, to educate them, to expose them to potential opportunities. With a lot of stocks up triple digits now, what advice do you have for investors who may think they, one, may have missed the boat, or contrarily, think it may be time to sell and bank some gains?
As a PM, every single day I'm fact-checking myself in a hot market. I don't have to fact-check myself when it's 2 years ago when everything was so bombed out, right? But when you see something like CDE, Core, like we just mentioned, great run-up, great company, yes, but an 84 RSI as we record this. We had to sell some in the last 24 hours because I'm just getting to the point where I'm in at $4 or $5. It's at 14 plus. I need to make money for my followers or else they won't pay me. And I want them to stick through this, over the next 2 to 3 years because it is going to be that good. In terms of have you missed it yet? No, because there's so many juniors not only attending here, but just out in hundreds of them that are just trading at ridiculously low valuations. Why? Because Bitcoin's had a great year. Crypto, in fact, in general, has had a great year. Real estate's had a great year. You can go down the list. Tech, the broad market, right? There's plenty of money being made elsewhere. I think what we need to see is the S&P and the NASDAQ that take it on the chin for a little bit. And I think you could see that as early as this fall because the market's getting priced for perfection, right? We're sitting here right now just before the Fed meeting September 17th. The Fed is literally saying with a 93% probability as of the recording here that it's only a 25 basis point cut. And I'm hearing 50s and 75s at this conference. I'm like, look at the website, guys. I don't know. I would love to see that. I would love to see 50 or 75. I'm just saying Powell is a pretty guarded guy. Yes, he kind of showed his hand August 22nd at Jackson Hole. I agree. But the Fed is important here. And it's always more important as you get through bull markets.
Okay, it has been a very busy week, and the metals prices have really been playing their part. Where do we start with this? Gold at $3,600 per ounce, silver at $41, copper at $4.50. Are the metals getting overbought? Is a pullback due? Is this something that people have in mind, or is this something people should have in mind?
Yeah, people should definitely have it in mind because this sector is got a lot of volatility historically. So, gold at 3,600 has an RSI, a relative strength index right now of about 77.5, 78. Anything over 70 you have to monitor, because things tend to melt up in big rallies like this. But at some point you have to take some profits, right? Silver's our largest holding. That also is getting slightly elevated, but I think that has further to run than gold on a percentage basis as we move into next year, because silver has been lagging gold for months and months and months, right? It's just starting to catch up. If you look at the gold to silver ratio, which is an ounce of gold divided by an ounce of silver, it's still very, very high by historical standards. So I think silver right now has to get through 42 to 43. That's been resistance in the near term. Once it breaks above 43 on a couple closes, you have to get positioned in silver equities or else it's going to be too late. And I'll also point out before we move on, 50 is obviously that big number, right, that everyone looks at historically from 1980 and the last rally of 2011-12. Don Durrett, my partner, and I look at it differently. You have to inflation adjust 50, and that's more like 68 to 70 an ounce. And that's what's really exciting about owning silver equities right now. There's a lot of leverage.
Well, a number of people we've spoken to here are talking about triple-digit silver.
Yeah, I hope so. It's my biggest holding.
Okay, fair enough. Now, it's been a very busy week. A lot going on both in the metals prices, miners and the explorers. Their share prices are starting to really run. Let's bring this closer to home for you personally, John. You organised some conferences. You recently announced the dates for your program in May next year. What are some of the things you're taking away from this conference in terms of what you should be programming for yours? Which companies should you be inviting to participate in that?
Yeah. So we have this is our third year, and we have a broad commodities approach. So we don't just do gold and silver, as this conference here does very, very well. We really broaden that out to critical minerals, copper, uranium, et cetera. And I get directly involved in the vetting process because I want investors to make money. I want them to come back the following conference, right? We adopt that same one-on-one meeting process. So we do with CEOs here at Beaver Creek. We love that format. I hate booths like we saw in PDAC, pretty much from inception to now. I'm not saying that's a broken format. I'm just saying standing at a booth and crossing your fingers and hoping for high net worth people to show up. I just don't understand that methodology. So we not only vet the companies, we vet the clients for the companies, because I own a lot of these companies and I want to make sure they have a good conference. So we also eliminate most analysts, bankers, flow-through reps. We don't want these people meeting with CEOs, because that's the biggest complaint I get from CEOs at conferences like this is that, man, half of my meetings, not necessarily this conference, but half of my meetings were, not that great, right? They weren't clients that were going to go buy the stock maybe this week. They were someone trying to sell me something. Look, there's a time and place for that kind of stuff, right? So yes, happy hour, fine. Don't do it in our one-on-one meetings.
Okay, let's bring this to a close, John. What are some of the things you're watching out for and that you think would be key over the next 6 months or so? Sure.
I should mention those conferences are May 17th through 19th in Washington, D.C. That's our second run. And then May 20th through the 22nd in Four Seasons, Fort Lauderdale, Florida. That's our third time there. So your question was, what trends am I seeing?
What are you watching out for over the next 6 months?
Yeah, so the Fed is paramount, because for us, that non-farm payrolls miss on August 1st was huge, because now Powell is starting to stress out about job growth, right? And then with September 5th, we had another miss. So that's 4 months of, more than that, but let's say the last 4 months have been pretty dismal. So now for me, I'm watching the S&P 500. That's where I think most people have their serious money, non-mining, non-metals. Their 401k is full of these ETFs that they couldn't even spell, right? So that's the risk. Is I tell clients all the time on shows like this, go to your financial advisor and ask hard questions, because right now We're at a 15.5-year rally on the S&P, and it's 45.5% tech as we record this. I mean, it's huge risk right there. And when the S&P cracks and goes down, that's going to be another catalyst for the mining sector, I think, because money will shift from growth and core over to value.
Excellent. Well, John Feneck, that's been very, very informative. Thank you very much for joining us again today.
Thank you, Paul.
And we have more to come from the 2025 Precious Metals Summit here in Beaver Creek in Colorado, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Precious Metals Summit is brought to you by New Core Gold.